My name is Tom Leahy and I am the investment manager at Everys Asset Management. Today I would like to update you on a number of developments within our business. 2013 has been a year of very strong market returns, as I'm sure you're all aware. It's been a particularly good year for us too, where our client portfolios have outperformed their market benchmarks by on average in excess of 3%. And this comes after a supercharged 2012 when we exceeded our benchmarks by over 6%. Our investment style is to travel optimistically with a weather eye on changing market patterns and a firm hand on the tiller to deal with emerging challenges. This approach has been well rewarded during 2013, during which we benefited from strong positions in US equities and a very strong overweight position in UK medium-sized and smaller companies. We also had the good fortune and perhaps good foresight to be significantly underinvested in government bonds. This super safe segment of the market actually delivered negative returns throughout 2013. We put this success down to our dynamic asset allocation process, which very much majors on valuation and market opportunities. The US market produced stellar returns during 2013 and we were able to take full advantage of this. It is currently fashionable to be critical of the US and to highlight the rise of the emerging East. We still think there are great opportunities in Asia, but nevertheless feel the US will surprise again this year with corporate earnings on the upside, a more benign political environment, and perhaps much stronger growth than commentators are currently expecting. We have also seen a marked increase in risk appetite and in terms of growth expectations for the UK economy. It wasn't long ago that certain people were talking about treble dips and double dips, and now we're entering a period when GDP growth could be anything between 2.5% and 3%. This means that employment is stronger. It means that wages growth is starting to emerge, and we are likely to see a favourable investment environment that continues to see UK-exposed smaller and medium companies do very well. And that means good performance for our client portfolios as well. In March, it will be 5 years since the market hit its very deep lows. In the subsequent period, we have seen a doubling of FTSE, a far bigger increase in mid-caps, and that all comes before we add on the strong dividend growth that we've seen, particularly in the last 3 years. But it hasn't always felt like that. Lots of clients have said to me, it feels like a bad-tempered market. It feels like a market that still is fragile and volatile. And they yearn for a time when things were simpler and more straightforward. However, I tend to remind them that, as the British philosopher, or one British philosopher once said, it is during periods of contrary winds and tough conditions that mighty oaks are formed, and also under immense pressure that the finest diamonds are formed. It is with that thought in mind that we enter 2014. We enter it with a tone of optimism, but we also are critical in terms of our outlook to make sure that we take full advantage of opportunities that present themselves, and also to reduce risks to the extent we can. Thank you for your time, and I look forward to updating you in the not too distant future.